Before we get started today, and by the way, I love the title of yesterday's session. Yesterday's session we were talking about, is this time to be getting ready for the blow off top, what others are missing, and I wanted to take that up today. However, someone within CTM, they asked if we could go ahead and cover and break down what this means. We saw that one of Putin's advisors was worried that the US is looking to go ahead and offload their $35 trillion in debt, and we want to talk about what that means, if it's possible. I like the play on words though, because the Genius Act, and I wrote the Genius Strategy. We're gonna talk about that, and before we get going, and then Monday. I just really wanted to kind of like hang out and spend this time with you today, you know, um, and just feel comfortable in that. Monday, we'll get back into the video that we had planned for yesterday. I just want to really just thank you so much for the overwhelming support, for the good thoughts, for the prayers. I am really it means everything. And although it's not something that I could talk about, I just want you to know. I'm reminded of Ephesians chapter 6, when we talk about, for our struggle is not against flesh, but against principalities. Like, God is real. God is in control. This is also coming at a time when a lot of people were obviously dealing with the tragic event of the assassination of Charlie Kirk. And that's a tough one. I guess what brought that to mind was talking about, this battle between good and evil, and it's very real. It's very real. And those of you who are really, close to the Lord know that. So I just want to say thank you for all the support. Um and please keep praying. How about that? And that I'm really, 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 I'm so happy to be here right now with all of you in our element to be able to do what we do. And I thank you for that. I'm grateful for that. So guys, with no pressure whatsoever, I'm gonna, in today's session, talk about a lot of things, as we always do. A lot of people, I saw a comment out on X today, and they're like, so no 12 to 18 month bear market in Bitcoin coming. I don't know. you know, we, for sure, the macro could change rapidly. I've never seen an 18-month bear market in Bitcoin. What are you seeing? That would be very different. If you believe in the 4-year cycle, and you believe that the cycle is about to peak momentarily, September, October, that's the window, and that we're about to undergo a 12-month bear market, that would be 4-year cycle behavior. If you're seeing something different, for sure, I'm seeing a lot different. So if you're seeing something different as far as an 18-month bear market, break it down. Let's see what you got going on, because I love entertaining all views. Now, I'm not going to, I'll listen to all views. I'm not going to spend time on views that I don't believe don't warrant it. But, you know, I really enjoy that. Amen. So Robert, this was a setup for this. Like, I'm just going at my own pace today to enjoy life with you and to do what we do. I don't think that the Fed is never going to change their inflation target from 2% to 3%. What, like, that would be, first of all, like, that's a number that originated from New Zealand central bank. It's kind of pulled out of thin air. Ben Bernanke is the one who embraced it for the Bank of New York Federal Reserve. They're like, prior to Powell becoming chairman, he was never really supportive of that. It's all like big, like, it's all fugazi, and it's just, what Powell explained it as, like, Well, if that's the perception the people have, then maybe magically it'll happen. But what is that? So with a 2% inflation target, and that's, but guys, that 2% inflation target is just means how they calculate inflation to be. It's never been 2%, even when they said it was 2%. Everyone knows that. And you know, are they going to come out and say like, okay, you know what, 3% is our new target? Likely what's going to happen is there down the line is going to be a time, there's going to be hard times. I don't think that we're in this new normal where it's going to be no more bear markets, no more recessions, up and to the right, no lost decades. And I don't know if they'll even, like, in the near future, do I see a lost decade? We know a lot of people that we respect, like Stanley Druckenmiller 2 years ago was looking for a lost decade. It's been up and to the right these past 2 years. But that doesn't matter that he thought that. It only matters how he positions, right? At the end of the day. But sharper, quicker cycles, you know, I could see violent moves. That's reminiscent of what happened in the 70s. So what I think could happen though at any point in time is, you know, you run into a crisis and you're going to see deflation in a crisis, and they're going to, inflation is not going to be 2% for a brief moment. They'll claim victory and they'll have got it down, and then there's going to be a policy response. And that's the worry, is that our view is that this was a wave of inflation. And remember, we called the peak of it, and then it took a few months, and then it started accelerating down. We tried to call the bottom, which we did. I mean, that we shouldn't have even done that, but we have to. We have to follow what's going on. Calling like the bottom tick, and then the top tick, and then the bottom. And I think why our expectations as Fed's cutting here into what seems to be, they're cutting into a bull market, that we're going to see reacceleration, and that's going to become the narrative X amount of time in the future. I was telling you that last week. I believe that. However, and doesn't mean that's what's going to happen. We show up every day, we figure it out, we put the work in, we do our best to stay on the right side. We can only consider what we're given. And each and every day, we're given more information, or we're given massive revisions of what, the past looked like. But hey, even with those past revisions, and don't forget, I'm the one who's saying, guess what? I bet you they go back and they're like, April, May was a recession. I feel like that's going to happen. But are we past that now? That's the question. Are we going to see a further erosion, or are we seeing improvements? All those things we need to consider. But, mortgage rates are coming down. A lot of people thought, hey, listen, Fed, like, markets pricing in rate cuts coming, what is it, the 18th? I'm not sure of the date. Next Fed meeting, markets pricing in first, beginning of a cycle of rate cuts. And hold on, I got a thought here. And bond market, people are saying, well, when the Fed cuts, it's going to be like last year when they cut last September 50 basis points. You saw long end of the curve selling off, long duration, 30-year, 20-year, 10-year, all selling off. That's likely going to happen again. You're going to see mortgage rates go up. Well, the opposite's happening. And, is that long? I don't know. Is that probably going to continue to see that momentum off of the beginning of these cuts? It looks like it. Certainly does look like it. And if mortgage rates comes down and it opens up activity in the U.S. housing market, likely we're going to begin to see a further acceleration of prices coming down, because there's so much supply out there, and more buyers are going to be more picky, right? The buyers that are now looking to make moves, and you're going to see assessments coming down. Is next year going to be inflationary or deflationary, or is it going to even it out? Shelter is a big proponent in the overall calculation of how they're calculating inflation, and maybe we begin to see higher energy prices next year. I mean, right now, obviously they continue to remain low. at some point or another, we're going to have this battle. And whenever we get to the next actual monetary policy response, when they actually do return to the devaluation and the printing and running that thing, that's when we're going to have to worry about the ramifications of going forward. And now the time between here and there, that's likely a lot longer than people expect. That's likely, even if they're able to re-engineer and accelerate growth coming into 2026. Do you see inflation getting above 4%? Maybe if it continues into 2027, maybe that, but it's going to be a while before that happens. When that happens, then it's going to become a much bigger problem. We are far from that. And again, a lot of people are able to correctly see what's coming. It's their timing that usually is just not right, and that's where we are. All right, let's just flow our way in over here, and we'll get to the topic at hand. Start with our positioning over here, and you know what? I'm just gonna highlight once again as we are defying seasonalities. I mean, unbelievable, and I think this is the best way to view it over here. And this track so far is from this time past the drawdown is the highest elevation of any other track. So is something different? I wonder. Well, that's different. An 18-month bear market would be different too. The gold's reaction here, that's different, right? It's definitely different this time. Does that mean that, like, well, anyway, let's keep going. Let's get into it. As that's happening, I was very cautious about what September brings. And I have to say, I remain as so. And I told you, I thought any positions that I'm taking, I'm going to get chopped up. Nevertheless, I know, unfortunately, people that are out on the sidelines. We're not on the sidelines. We've got to go from rolling back into 100% into cash. And now, all of a sudden, in 1 week, heavily positioned. By the way, Ethereum back into the market. Cardano's back into the market. It's not showing on the dashboard. Dog Nation have to take a look at that. We'll work together and figure that out. Bitcoin bull runs is back into the market. Our swing trading templates on Bitcoin all remain holding open position. NVIDIA didn't get a confirmation yesterday. Tesla did. Tesla entering the market, and all of a sudden up 6%. Right here we got some 1 hour templates. FNGU, it's holding open position here. TQQQ open position. The only thing out of the market right now for our stocks are two. We're looking at MicroStrategy, and we're looking at NVIDIA, both on the sideline over here. But everything, the other four are all in the market, and who knows? Maybe we don't get chopped up. Maybe we get some, some small gains. Who knows what happens? Maybe we get some big one. That's what trading a plan is all about. It's not what you think is going to happen. It's trading what's happening. Bitcoin bull runs back into the market. And we see that, all of a sudden, in the flip of a switch, we are 75% allocated in crypto as well. And that is just very, very, very quick. By the way, Solana on the coming V4 template is in the market, and it's in the market with an 11% open position. That's going to be huge. That makes, buy side boost, right? That would have been carrying the full position, taking profit as Bitcoin entered the market over here. And then Ethereum is still on the sidelines carrying 2/3 of the position. It's going to be a big deal. 2026, 2025, later half of 2025, setting up a legit 2026. That's right. That's all we do. That's right. We allocate around momentum, and we're just managing risk. That's all. I say it like that's all. That's everything. Guys, conquer the markets is such an extremely bold claim because the markets are incredibly difficult. We're not talking about surviving the markets, being able to match the indexes, conquering the markets. Absolutely beautiful. And that requires CTM strong. By the way, Cabby, I didn't get a chance to see the psychology of money video that you posted. I have it on my radar. I'm looking forward to getting into that and doing that. And we will soon. You saw I put out a post, and the post, well, not here, over here. And the post was talking about, listen, you remember back in 2022, I was pointing out historically, because we saw the yuan, the yuan, Chinese yuan begin devaluing. Fast forward to today, look at that massive devaluation that took place. And, is it bottoming over here? It looks like it could be bottoming over here, you know? How do you time that? Like this for me would have been stopped out right over here. Is that a secondary breakout? I mean, it's active. It looks like it's bottom. It's definitely here, stabilizing and rounding out. Looks like the yuan is bottoming. And I'm not trying to time it at so much as that just give the view, which is very important, is that two things. First of all, remember at this particular point in time over here, markets were under heavy pressure in April of 2022. They didn't bottom out for months later. But I did say by the time they stop when the yuan is devaluing, by the time they stop by the time it stops devaluing, that risk will be higher. S&P 500, is it higher than April or even the low of the bear market of 2022? Yes, significantly. Is Bitcoin higher than where we were back in 2020? Significantly. Check. Is it a true statement? By the time the yuan finishes devaluating, risk is higher. Yes. Here's the kicker though. When it begins appreciating, and it hasn't begun appreciating yet. This is when it begins appreciating. This is the 2017 mega bull run. This is where it begins appreciating. This is the end of 2020 bull run. That's when risk really goes crazy. And are we getting close here to where we're going to begin to see the yuan appreciating? I don't know. I don't know if this continues here, rounding out for a long time. Remember how gold went sideways for over a decade. I don't know how long it's going to take. It's in motion. And we're talking about cycles, and everyone's like, 4-year cycle. And I'm like, guys, the halving dynamics have changed. When they have the miner's reward, it does not have even remotely the same effect on the supply demand dynamics as it used to. It's the global refinancing cycle that happens every 4 years. Guys, that's changed over the last 3 years. They stopped rolling over long duration. They've been rolling over short duration. That cycle's changed. Oh, all right. We see, guys, it's not, is it different? It's always different. Does it rhyme? Yes, it rhymes a lot. When was the last time that fiscal dominance trumped monetary policy? 1940s. Is it different? No, it's not different. What did they do in the 1940s? Yield control curve. Are they doing that now? They're not there yet. We're not that part of the cycle yet. Are we getting there? I don't know. Treasury buybacks have been increasing a lot. They're still small, but they've been increasing a lot. That's it. I like that you say that, Deepak. We've talked about how and guys, I thought personally China's bazooka would probably come years ago. In 2023, I was looking for China to go with the bazooka, early 2023. They never did it. And depower, you're exactly right. Because and I know that we talked about it for sure, but they wanted to wait for, well, okay, you're talking about even a different aspect. You're talking about just for them to begin lowering rates. And I don't, which probably is correct, and that I like what you're adding here to the conversation. It might not be until the US returns to outright QE, or I don't, but maybe they're even going to be more accommodative when Fed lowers rates. Interesting dynamic. I think it's really worth adding into there. But if they do that, then I don't. It sounds like I don't think we're going to see the yuan appreciate on that. You know, yet. But that's why I said I don't know when it's going to come, but it's going to come. It's going to come. Never know. It's never happened before. We don't know. When I say it's never happened before, I mean we can look at other corrections, right? We're looking at other corrections over here. The only other time that there's a similar track to what we're experiencing now was the 1998 track. There's not one other. Any other of these are dissimilar. This is like the mean down over here. 1968. That's almost the mean. This is an outlier. What's different this time? Fiscal dominance. That's different. Yes, it is. You know, and there's. I don't. Is it an AI bubble? Listen, if this is the top, then it was a bubble, or is there a real fundamental shift towards massive data centers and massive compute power? It seems more than real to me. It seems more than real to me. What the ramifications are down the line, and we don't know that. Did you guys see the Sam Altman video with Tucker? Man, that was bad. If you didn't see it, it's very short. You can watch like a 7-minute clip or something, but do watch that. Do watch that. I wish I had the capacity to talk about if you do a search for I gotta find the video for you. There's a Luke Groman video where he's recently talking about how the dollar it's not looking at the cross between the yuan and the dollar, but the yuan and the dollar in relation to gold. And I don't like to talk about things that I'm not able to with precision. So I'm gonna find that video and then I'm going to share it with you next week, and then we'll talk about it. It's very, very, very important. I just want to add it into our overall consciousness. So this is remains different. Last time 1988 we had a bigger consolidation. We haven't had a consolidation yet, and again, I'm looking for it. I was waiting for it, and I was cautious for it. Maybe it comes after the Fed, and just to set everyone's you know expectations correctly, I'll bring it up one more time. Look at 1 month after a Fed begins a rate cutting cycle. It doesn't matter if they're cutting into normalization, recession, or a panic cut. It's really, none of them are green. So maybe that's when we get a little consolidation. I don't know. The markets right now continuing to defy tracks off of a 20% drawdown, continuing to defy seasonalities. And that's what's going on right now. So let's get into the next part of the conversation. Speaking of devaluations, and I think this is really interesting. This is talking about, was brought up, one of Putin's advisors is warning that the United States is planning to leverage their stablecoin backed by US Treasuries to offload their $35 trillion debt to the rest of the world. They're first going to push global adoption and then devalue the dollar, leaving the world holding the bag. Let's talk about this. Let's talk about this. JDK, what's up? Let's talk about this together. And this is a short video, but I'm going to go in and out here to begin this conversation.
Прямо сейчас пытается поменять правила на рынке золота.
So the US is now trying to rewrite the rules of the gold and cryptocurrency markets. I put this chart up over here because, listen, I don't know. I could very clearly talk about how rewriting the rules with cryptocurrency and the Genius Act and stablecoins in relation to government debt and not necessarily the devaluation. We'll talk about that very specifically, but a further demand for U.S. Treasuries with stablecoins backed by U.S. Treasuries. I don't know. He's mentioning gold and cryptocurrency, and I'm curious how gold fits into this overall puzzle. Obviously, we're watching gold being repriced in real time. Again, we don't think that it's close to being over, and we just said, hey, listen, on the $2,000 breakout, it's not stopping at 2,500. I'll see you at 5,000. Like, we'll reevaluate when we get there. And this is an interesting chart in so much as I picked the last risk cycle top. And off the last risk cycle top, November of 2021, don't forget that's when monetary base total began declining. You're seeing gold outperforming Bitcoin, but both performing extremely well. Obviously, it's much different if you line it up off of when risk began to run at the January 2023. And so you got to really pick your spots of where you're trying to have some type of measurement. If you go in the middle, how about you go in the middle? You don't need to go spectacular. I mean, Bitcoin is obviously the fastest horse in this race. So I don't know why he's talking about gold. If anyone has any ideas and or opinions, let us know, please. Come on, guy.
Вспомните, какой у них долг. 35 триллионов долларов. В общем-то, это два альтернативных валюты.
Okay, $35 trillion in debt. We know that. By the way, and so first of all, they're scared, right? Like BRICS moving together, trying to form this multipolar world, and BRICS looking to potentially use gold as a backing of their trade. Okay. And they like see the US is weak. All right, this is our time to really try to align and make a move against the US. This is what they're doing. And the Genius Act is passed. So what do you mean they're scared? Well, you're trying to take out the king, US dollar reserve currency. You're trying to take out the king, and you're making moves, and now all of a sudden there's a curveball thrown at you. Whereas, wait, Russia was the first. U.S. sanctioned Russia. U.S. one who messed up. U.S. confiscating Russia's reserves. U.S. messing up, no doubt. But Russia responds, fine, we'll get rid of all of our U.S. treasuries, and we're stacking gold, right? I think Russia reacted. I don't think Russia was the cause. I think the U.S. was the cause. Nevertheless, fast forward, now all of a sudden they're like, okay, we're not buying treasuries, guys. You don't think they whisper and huddle together, guys? Start stacking gold and buy less U.S. treasuries, guys. We all know too what is happening. Obviously, as clear as day, you could say that, well, central banks are holding less treasuries and they're holding more gold. It's not like it's a conspiracy in so much as that it's people conspiring together. It's not a conspiracy theory. It's the reality. And then you go forward. U.S. responds, passing the Genius Act, stable coins, and what this does, from my opinion, is this prolongs the dollar's dominance in so much as that if successful, what I mean if successful, if you're able to see the stable coin market grow, they're projecting by 2 trillion by what year? So maybe 2026, you know? And then they're projecting massively bigger as we go down the line. But growing at 30% a year, that's like a nice compounding rate, and they're expecting the stable market to continue to grow. And now it has a built-in demand for US Treasuries. That prolongs this whole dollar system. As you're looking at, foreign demand decreasing, this is US Treasury holdings, and you could see, by the way, look at Tether now becoming the 18th largest holder. And we could see China, they still hold a lot of treasuries as they do a lot of business with the US, right? Cayman Islands, what's that all about? Is that hedge funds buying US Treasury? Is that some type of US government agency making sure that regardless of what happens, there'll be a bid? If China dumps $800 billion of US Treasuries tomorrow, is the Cayman Islands all of a sudden going to have 800 billion more? Japan, obviously, United Kingdom. United Kingdom's become a larger and larger holder of U.S. Treasuries. But altogether, you're looking at of the $35 trillion of US debt, you're looking at all of these foreign holders holding $8 trillion. $8 trillion is a loose number. I'll tell you exactly what it is in a moment. Okay? But go with me and bear with me. Let's go take a look at this. This is domestic debt. All right? So yeah. I'm trying to figure out how much foreign debt there is. It's a number between it's $7 or $8 trillion. It's I know that's not an accurate number, but we're talking $35 trillion. Foreigners own roughly, let's call it $8 trillion of that debt. Okay. Why this is important is because, well, if the US were to go ahead and actually devalue the dollar, who is facing the consequences here? He's talking about, or Putin's advisor here is talking about. I'm going to come back to that slide in 1 second. I want to finish this thought out over here. You ready? All right. So before we go there, is he worried because do foreigners, not foreign governments, do people of foreign countries want to hold US dollars? Yes, they do. Do Russians want to hold US dollars? They would love to. Are they able to in Russian banks? No, they're not. Are they able to through some decentralized exchange? Yes, they can. Right? Is it just Russians? No. Now, not everyone. You go to Eastern Europe, they don't want anything to do with dollars. They thought back in 2012 when they had the debt ceiling problem, and if you looked at the cross between the euro US dollar, it was trading at like $1.47 per euro. They thought the US had defaulted, and ever since then, and these are countries that don't trade in euros, that trade in other like marks or something like that. Ever since then, they just want euros, and that's a long time. That's 12 years ago, and they don't want anything to do with dollars. But other countries like Africa, other countries like South America, other countries like Mexico. Now, usually in a Mexican bank account, usually you could hold dollars, you know, or you could have a dollar denominated account. You can't in Argentina, right? So it's not that you're going to see central banks continuing to like hold stable coins you're going to see the people of these countries for sure. It will increase whatever the reach is today. Like if the foreign reach of total US debt, which is central banks holding roughly $7-8 trillion, it could be a little bit less. $7-8 trillion of US treasuries by other people holding stable coins, that increases. Does it increase by a large number? No, but it increases. Who's the biggest holder of the US debt? okay? Because it's not foreigners. Well, who's the biggest holder? Well, you have a few. First of all, you have Social Security and Medicare, and they hold roughly 22% of all of that debt. And the reason I'm mentioning who holds the debt is because we'll talk about whether or not the U.S. is going to devalue that. But are they pushing it out onto the world to hold the bags, or is it pushing it out onto whoever holds the debt? Right. So again, that's why I bought it to this is fear based, and it's fear based so much as that he's talking about gold and crypto. Gold, Russia's the one who's proposing gold, right? What does that have to do with the U.S.? So if anyone has any idea at that. So then we come into domestic investors, mutual funds, pension funds, individual investors. They're holding roughly $5.8 trillion. Okay, which is almost it's a little bit under the total foreign demand, but it's pretty close, right? And then you have obviously man, I couldn't figure out how much the Fed themselves own and hold. I guess we could do it by a process of elimination, but we have 22% held by Medicare and Social Security, and we have another 6 trillion held by oh sorry, I'm sorry, that's the Federal Reserve, $5.8 trillion. But the Federal Reserve's holdings of 5.8 trillion, right, which is roughly close to just below on par with all of the foreigners who hold it. And so the majority of the holders of the US debt, aside from the Federal Reserve, because that's just all Fugazi anyway, they have no reserves, is a portion of foreigners and then domestic within the US. So it's not like the US has this plan to offload their debt. How would they offload it, right? Could they devalue their currency? Yeah. Does that devalue the debt? It does. So if you look at what's happened over the past year, US dollar's off 10%, you know? Well, what about the yuan? Has China's US treasuries over the past few years increased in value compared to the yuan or decreased? Well, they've increased, right? Um in the past few years, has the dollar gone sideways, increased, or decreased versus foreign currencies? Basically, it's basically the same as it was X amount of years ago, right? Could in the future we see a next leg down of the dollar? I think so. I think that's what they want to do. I think that's what they're trying to engineer. Is that going to offload the debt to the foreigners? No, not so much. A little bit, yeah, but it's not like this crazy plan. What it is a plan to actually institute more demand for their debt. They have a growing debt. They have less foreign interest in that debt. There's a growing cryptocurrency market, and this goes ahead and it keeps the music playing a lot longer. I think that's the plan. I don't think now it's not above the US. They've done it before, right? 1930s revalued the dollar versus gold, right? 1970s, forget the peg to gold. We're depegging. When it comes down to it, they'll do it again. And if they need to go ahead and they need to have some type of debasement, 2020 sort of major debasement, but it wasn't just the dollar that was debased. It was currencies all over the world that were debased together, right? So it wasn't as if the US was able to win that fight of debasement. Now, what's winning is obviously hard assets, right? And hard assets are going to continue to win. I have somewhere a chart of, there we go. These are the winners. So, well, I think he's scared. Again, it's also very important to pay attention to propaganda, foreign and domestic. And wherever you live in the world, the powers that be are using propaganda against you completely and always. And you have to be aware of own domestic propaganda and foreign propaganda. But what I'm reading here and trying to break down, as you see all these people say, the Russians said that the U.S. is trying to offload their debt to the worldwide. No, the majority of that debt's held by domestically, and they're not trying to do that. What they're trying to do is create demand for their treasury market so they could keep the music playing. And yes, the Russians don't like that because the Russians are trying to bring them down. They're obviously adversaries, and they're trying to go ahead and they're trying to arrange this whole other group of bricks to go ahead and counter the dollar's dominance. So, and one of the reasons they're scared of the stable coins, though, is because it gives people within their countries access to US dollars. And people in those countries do want US dollars. Jump it over, and I saw a question about why I don't have, so the like, did we see the worst of the unemployment, or are we starting to see actually hints of strengthening of that market? By the way, one of the things we need to talk about too is what, like, I brought it up on Twitter. I didn't get into it with you yesterday. The most layoffs have come from the tech sector, right? So this is bad in so much as that, let's call it, to make things easy, the bottom third, they're feeling that stagflation. They're feeling the loss of their purchasing power. They're struggling. They're in a depression. It's horrible. And unfortunately, let's call it the next third, that is going to be dwindling down, and this lower trench is going to get bigger and bigger. That's happening. And as you take, like, let's pretend it was 50,000 tech workers and they're out of work and they're not able to find new work, they begin to suffer. But do those tech companies suffer? Are they earning more or less without those workers? They're more efficient. They continue to improve their earnings. They're earning more. They actually have less obligations and salary now. They continue to. It's super bullish for these tech companies themselves. And is the market pricing in the economy and that bottom third, or is it pricing in, you know, the obscene allocation to the Mag 7 and their earnings, which are real and substantial? So that's and when does the dynamics of, well, there's no more demand for anything because everyone else has their livelihood has been obliterated. And eventually dynamics, but where are we today and where will we be tomorrow? Not where will we be 2 3 years down the line. That's what we're trying to navigate. Yeah, and that's another thing too. Not junior level Dobbs. I don't even know what I'm thinking here. I'm trying to level entry. I don't know what I'm trying to think of. Man, and retailers must be suffering for the past year. So maybe, you start seeing the housing market opening up. That's actually that could be quite bullish. Finally, some people able to earn some money. Anyway, um, so Cabby, I'm not sure. I want to. There's two things I want to make a priority for Monday. Number one, digging into the current state of the employment market, and then obviously coming into the title of yesterday's video. What else? I'm happy to be hanging out here with y'all. We covered everything that I wanted to cover today. And yeah. Yeah. And that this is also the problem, is that the rich keep getting richer. Now I wonder if they start lowering rates, this it's super stimulative. All that what is it, $7 trillion parked in money market accounts? And they start lowering rates, and that's like a form of stimulus. What I don't know what it is, 5%, 5.5%, 4.5%. Rates bring rates down to 3%, 3.5%. That's like that's pulling back stimulus in a sense. But it's not even the top third. So I couldn't do third, middle class, another third. It's just the top 10%. Like they're doing so well that you know it's horrible. Yeah, for sure can. Someone asked something about Circle. My thoughts on Circle. Uh, the IPO was around the time that the Genius Act was passed, and obviously there was a lot of hoopla going around. No, I don't know. So when it comes to Circle, like Tether's business model is not the same as Circle's business model, right? And I think it's fair to say that the market cap of Circle, which is already substantial, is going to continue to grow. And yeah, I mean, long term like, okay, we're looking at a projected growth of 30% a year in stables. Uh, Circle, it has the second largest market cap. We're going to see, obviously, the launch of other stables around the world, but US stablecoins are 80% of the worldwide market. That likely, I imagine, continues, you know. Um, and then say Circle is roughly 35% of that. So if that all continues to grow, as the whole cryptocurrency market lifted by Bitcoin is expected to grow, is Circle also going to be? Yeah, I think so. I would rather, if I could own one. I wish I could own ownership in Tether, but yeah, I think that's pretty bullish overall. Let me start on some 3-day charts. And how does this look? This is Coinbase. Has anyone traded yet the perpetuals in the US out on Coinbase? So how are those markets looking? I just The problem with Coinbase though is you can't trust you're going to be able to withdraw your money. That's a pretty big problem. I don't have a read whatsoever on this chart. I don't have a read on this chart at all. Love and silver. Is it 42? 42 cents. Is anyone worried about not being able to withdraw your funds? So that was a massive sell impulse. You're into the first buy impulse out of it. I would just then be watching, you know, but breakout in effect. CoreWeave. That I mean, when I'm looking at these charts, I'm just being like, well, I don't see any opportunity. And then I'm thinking of the Nasdaq here ascending to the highest track during an unfavorable season. Yeah, I think caution's warranted. So I had alerts for Riot. Let me check out Riot. There's Riot on the breakout. There you go. I saw you talking about UPS. Oh, That's not a good sign. Oh my gosh. What is smart rent? I'm not familiar with smart rent. Oh my gosh. Where were you guys? This is this could have been the best opportunity of 2025 right over here. Where were you guys? It's a tough one. You had a similar price action right over here. Rent soft rent software for rentals. What kind of rentals? Housing rentals? Yeah, so what's interesting, we're seeing lots of in BlockFi, but you're seeing, or we were seeing, as Bitcoin was trading 120, I started seeing lots of chatter about borrowing versus Bitcoin. I see two camps. People who are doing it right now on platforms like Strike, and then others who are like, you know what? I'm gonna wait one more cycle, whatever that means, right? So because well, we'll just say 4 years from now, I believe that the lenders themselves will have matured. In other words, I believe I'll be able to go to my bank and and JP Morgan's going to be, I'm going to be able to put up collateral and borrow against my Bitcoin. And I also believe my Bitcoin will have appreciated significantly more over those 4 years, which is obviously not a given, but our expectation. And then, that's when I'm going to be a lot more open to doing something like that. Like Bitcoin lending in the past was like, lend your Bitcoin and we'll give you why we lend it out for outrageous yield. And that was obviously Celsius, BlockFi. FTX was just, you know, an absolute fraud. Um, Strangely enough, their creditors, anyway. Um, So Celsius, BlockFi, and lending for yields, that doesn't take place anymore. Does that mean that Strike is not rehypothecating your Bitcoin and it's being lent out elsewhere? Jack says they're not. Don't trust, verify. If you're lending it to your bank one day, is Bank of America going to be doing that? I don't know. It seems like, you know, the bear market of 2022, as the Fed did begin their tightening monetary policy and rate shock, definitely led to the collapse of 2022, of FTX when the tide went out. And the bear market, Bitcoin corrected 76%. It's notable that it would have corrected less. Probably, I think it's only 73%, but check this out. Bitcoin would have, right here, if it weren't for the FTX collapse, it would have bottomed out right here. I guess right here at the 3 hours, right? 75%. I guess is that much of a difference than 77? It's not much of a difference. Um, Great to see everyone. And to that point, though, like eventually there'd be something else. Now, will it be something even way more sinister, like an attack by BlackRock? Is their attack taking place right now? Is is Bitcoin Core corrupted, or is it not? Is it not? I don't know. Um, will there be something that that's in no one's radar? Likely. Or is like the next fraud coming from a different the fraud that takes place in the public markets, in the stock market, is absolutely bonkers and nuts. By the way, do you ever see on the documentary The China Hustle? Super fantastic. If you haven't seen China Hustle and you're looking for a film to watch this weekend, watch that one. And then you know, is there going to be something that is going to come in and derail? Yeah, I think people are focused on recency bias and what happened in the past, and I think they might be missing the forest from the trees. And I think that's going to become a lot more apparent to people as we move towards the summer of 2026. Around that time, I strongly believe that everyone is going to be embracing what we've been saying here for well over a year, and, watching the changing dynamics and the ramifications. The work that we began in January 2022. Since then, it should be clear to everyone that, Wall Street is here, corporate treasuries are here, the shifting dynamics, the players in the market. Retail's irrelevant. We've been saying that for well over a year as people look for Google Trends to find out when the bull market is going to be. Retail's irrelevant. I'm sorry, you know. Um, Solana's moving too. V4 will be here extraordinarily soon. How have they held up through this recent correction of MicroStrategy? Man, I hope MicroStrategy gets back into the market soon. That would be fantastic. Knowing when to be in the market and when out and on what side is absolutely priceless. Yeah, MicroStrategy could be making a move soon. Are we about to see escalation in the housing market as and if rates do come down, a lot of Airbnbs need to be offloaded. I think we did a good job calling that. Oh, look at that. We've seen a bounce back right here, Ace. This was the breakdown. Oof. What you got here? Cipher mining. What's that all about? Guys, here's the thing. This is what we got it for looking and you guys need to do it a lot more often. We should get into the habit of doing it regularly. You guys throwing out different stocks. We gotta get on the radar, at the right times. And same thing here. We gotta learn how to do that. That's what you gotta do. If you want to speculate on stocks like that, we want to be, as everyone else head is turning towards it, that's when you want to be distributing. So we can't, this is awesome. What happened here? How do you find it next time? Amen, Craig. Thank you so much, Craig. God bless you all. Same thing with these products too, and I think that there's value there. Toxie Maxi, the one problem I have though, and I spent an enormous amount of my time not so much looking into Microsoft's products, but more so along all of the high yield offerings. And the thing is, at the end of the day, not one of them comes remotely close to being able to compare with our strategies. It doesn't, not even remotely close. And the problem they all have is a decaying NAV. And I tried so hard to find, and all it did was reinforce how extreme of a strategy that we have. All right, y'all. Hunter, thanks for being here. Everyone, I'm gonna end here on Craig's note and just say, have a beautiful weekend, everyone. God bless you. Thank you. I'll see you soon.